Hi traders, Nathan Bray here from ACY Securities. I want to have a chat to you today about what is going on in the global stock market. So we've seen a big sell-off in global stock markets into correction territory. That is over a 20% correction from its highs. And the fundamental reasons were very clear and were made very prominent to us. You had a situation where you had high debt, you had a high inflation problem, but you had economies starting to shrink. So you've got the US, the biggest economy in the world, starting to contract 2 quarters into recession territory. You've got, for example, the UK are now going 1 quarter into negative territory. Problems in Europe. You've also got retail sales yesterday out of China starting to fall off a cliff in line with their industrial production. So all of these problems were seen to be weighing on global stock markets, and we did start to see it on one side. But what are the factors for this recent rally? Because right now we're seeing prices in the Nasdaq, in the S&P 500, in the Dow Jones, all starting to rally and put in daily trends. So I'm seeing higher tops and bottoms. In fact, we're now rallying back up to about a 62% retracement level on the weekly in a number of them. So very interesting times ahead. So what could it be that's actually driving these stock prices higher again? So I'll look at things that maybe we're not discussing in detail, and that's what I want to hit you with today. So what we're seeing that we're not talking about, other than the higher inflation level, is we're seeing all this money again. So we're putting interest rates up a little bit, but meanwhile in Europe, they're starting an asset purchasing program. So a massive one. It's called Unlimited. In fact, the correct name is the Transmission Protection Instrument. Now, what does that mean? That means they're going to start buying bonds. They're going to start buying assets. And what are stocks? Well, stocks are assets. So as this was released in the later July, we really started to see stocks around the world moving higher with all this new money, which had previously, the pre-COVID period, they had another asset purchasing period of policies. And what did we see? We saw stocks going higher. We got Switzerland. Switzerland, by the end of July, were owning about $177 billion worth of US stocks. Okay, one of the biggest sovereign entities outside to own those stocks. Then we saw a situation now in the US where they're coming out with this, let me give you the correct term, the Inflation Reduction Act. Doesn't that sound fancy? It's like, we've got this inflation problem. How are we going to deal with it with this inflating balloon of money? I know what we're going to do. We're going to put in $430 billion into this inflating balloon. How is that going to bring back inflation? These are the things that we're starting to see that we need to start to consider, because all this money and stimulus money going back into these stock markets could be pushing the stock price a lot higher than maybe the fundamentals on this side are suggesting that it might be well above that value. And this is the thing to consider. Even though we've got recessions, even though we've got raising interest rates, all these things on this side, but on this side, we've got all this money, which remember, Americans, Europeans, they're all eventually going to be on the hook for it. All this money is pouring into stock markets. And the question is, at what level do we want to make a decision on whether or not the correction trend's going to continue, or is this just going to push stocks to a higher level?